Hi, my name is Nigel Gorski. I am a chartered accountant based in the Bingley area, and my main role in life is to look after small businesses. This is one in a series of short videos to help you understand the things in taxation that will affect your business. Today we're going to talk about the VAT flat rate. Now, the flat rate might be known to a number of you as it's been around for quite a few years, but I just thought it was worth refreshing because there are one or two changes coming up pretty soon. It was designed to simplify the accounting of small businesses. VAT is probably the tax where you do get a number of errors from smaller business, particularly when you are reclaiming VAT on purchases, because that can be quite a risky area if you get it wrong and if you get a VAT inspection. So what the flat rate was designed to do was basically tax your takings and allow you to pay a lower rate of VAT but not reclaim the VAT input tax. So there are lots of different industry categories. For example, accountancy, which is my profession, you collect at 20% of your gross takings, but you pay only 14.5%. There are some much lower ones for manufacturing businesses and other businesses that involve the purchase of goods. So it's worth having a look on the HMRC website to see what category would fit your business. Now, there are some eligibility rules for coming into the scheme, and you need to be taking less than £150,000 net of VAT to allow you to go into the scheme. Now, the good news is you don't have to come out if you exceed those takings. The exit threshold is significantly higher than that. So, the bad news is you can't reclaim VAT on your purchases, but if you buy something big like a van or a job lot of computer equipment, then you can still reclaim the VAT on capital items as long as you spend more than £2,000 including the VAT. You just make an adjustment to your next VAT return on that. Now, it's really important that everything is on one order, part of the same set, to be able to do this. And there are some very, very good examples on HMRC's website of what constitutes a job lot of capital expenditure. Now, I mentioned earlier in the video that there are some changes coming up. Currently, there are a number of labour-only type professions, such as consultants, who pay 14% VAT flat rate. Now, in his autumn statement, the Chancellor announced that there was a new 16.5% rate of VAT that was coming in for people who have very small expenditure in relation to goods. Now, the briefing note is out, but the full detail of how this is going to be implemented is not out. But I would encourage anybody who thinks they're in the labour-only category to have a look at that note and to determine whether their expenses would comply or not. Now, 16.5% sounds still fairly generous compared with the 20% you collect, but don't forget the 16.5% is of your gross takings. So believe it or not, if you do the maths per £1,000, you keep only £2 per £1,000 of VAT to cover any input tax. So at that point you may wish to go back to the standard scheme. So if you have any other questions regarding this or any other parts of the video, please let me know. Thank you very much for listening, and please tune into the next video.